S&P 500 as we get ready to trade January week 4 on Tuesday after the markets reopen from the long weekend, honoring Martin Luther King Jr.'s birthday on Monday. U.S. markets are closed. Futures will trade Sunday night tonight through, I think it's 1 o'clock Eastern time tomorrow morning, and then they will reopen Monday night at 6 p.m. and we will sort of start our new trading day for futures at that point. Here is our S&P 500 roadmap. Here is what happened on Friday. On Friday, we had a small gap down from where we had closed on Thursday, and on Thursday, we got all the way up here to nearly fill the gap to the previous week's close, where our all-time closing high is. We took a tiny little look below that and failed, and we wound up selling off and closing, breaking to a new low of day and closing just off of it. Then followed through with a gap down open on Friday. But we sort of held out and gravitated around the 3780 mark. We came up with, we had monthly OPEX on the open. So the S&P 500 options were, people were sitting around waiting for that monthly settlement price. And we came in with 3782.21. That was a new all-time high monthly settlement above the 3780 mark. So that gave us some bullishness to hold on to, but then there was some 10 o'clock data that kind of missed the mark just a little bit, and we fell right down below that set price, right down through the 10-day simple moving average, and the rest of the day just sort of puked its guts out. I think you could see that here was maybe be about a double down from loss of the 10-day. Here would be about a triple down, and we were going into, almost 3 deviations below that 10-day simple moving average until we got all the way down here to test the 20-day. And you can see we held above that like a champ. We did not quite fill in this big gap here to Wednesday's close, Wednesday of the previous week, which was the day of the DC riots. That's January 6th. And we held above the January halfway back, which was just below there. So you can see we're holding open at some very strong, believable levels that could carry us through the next couple of days. See if we consolidate and continue to hold these levels, especially the rising 20-day, which is going to give us a line to use to measure against Friday's low. If we keep holding that, then we're good to go. But if we come in weak on Tuesday after the holiday's over and break down below Friday's low, then obviously we're going to be coming all the way down here to test the area of where our lows were in the first couple of days coming into the new year. Our very first trading date of January and for 2021 was this huge 2.5% down day, 2.5% below where the previous year had closed. Came all the way down here for a current 2021 low of 36.62. And so this was 2.5% off of that close. And what I was looking for was a symmetrical move all the way up here to 38.50, which would have been 2.5% on that close to sort of match. And I thought once we got up here, then we would pull back and fall. But it looks like instead people don't want to, people know that once we get up to a new all-time high, that probably maybe 38.50 is a very conservative measure of where we would be going. So we just, without avoiding all of that altogether and in front of monthly OPEX, there was no way that was going to happen. So we just pushed lower from there. Also, we have the 80 handle rule in play, and we often see once we cross a new handle, such as 3,600, 3,700, 3,800, for the S&P, we take a little look above it between 25 and 30 points. That is sort of the Wild West area, always, in a range. Until we could get to 38.50, then we start into a new set of the 80 handle rule that would propel us towards 3,900. So we just kind of stopped short here and pulled back, and nearly 100 points off of our high for the week when we got down to the low here, about 80 points. Our high for the week was 38.2360, and our low was 37.49. So nearly 80 points of a clip there just in 2 days. Stairs up and elevator down, as they say. Okay, so let's take a look at this move in a more simplified chart here. This is our simplified daily chart. You can see another measured move that I gave to you guys was this one, where we would take the December range and either double it up or double it down. Well, if you can see that we took a look below the range that sort of marks where we could double it up. We took a look below, but we reversed and closed back above it pretty nicely. So let's use this close from 2020 at 37.56 as another line in the sand for us. And as long as we hold closes above that, we look pretty good to go to just get through these next few days of uncertainty and take a run at our 38.50. And if we make it over 38.50, we'll go after this measured move target. If we break down below Friday's low, there's really nothing to stop us until we get to the December halfway back at 36.96. So that would be, breaking down below 3,700, which makes a lot of sense since we took a look above 3,800. We came down, we broke 37.80, we broke 37.60. If we break and close below 37.50, then it just makes sense that we're going to go all the way the distance to 3,700 and maybe take a look below it by testing this halfway back point from December. And if that goes, we have our rising 50-day just underneath that, and the rising 50-day would hold a higher low for the year against the one we made on the first trading day. So I think that for sure would hold us if we did get a stronger sell-off or another leg of selling going. And you can sort of see that if we were to take this whole move that we've made from Friday's low, from the all-time high to Friday's low, and if we were to double it down, I bet if I drew a box around this, it would match a move taking us all the way down here to the 50-day. Okay, so that's what I see as the worst case scenario for now. However, all it takes is for some uncertainty to be lifted. If we get through this weekend without anybody else dying in an insurgence or some kind of a riot, that's step one. If we can get through Wednesday's inauguration without anybody else dying, that's step two. Once that uncertainty is lifted, we could probably take off and get going. But if we come in on Tuesday after the long weekend and there is continued selling and we break that 20-day, then once again, we're looking for a move probably all the way to 3,700 by way of levels that we might, bump on along the way, all the way back down here to 3,700 to test the halfway back from December, the area where we closed on the first day and opened on the second day. Come down just below that and test the uptrend from off of the December low, and if that fails, come down and test the 50-day and a back test against the January low, the 2020 low. I'm sorry, the 2021 low that was set on the first day. Okay, I hope that all makes sense. If you have any questions about what's going on, please shoot me a direct message at the private account. Please read the 80 handle rule if you don't remember what I'm talking about with that, because this is exactly what's going on right now. And read about the halfway back once again. If you're not sure of what's going on, it's because we're in a brand new year and we are making brand new levels. I think we did all of our testing into the December range on that very first day, and from here, we're sort of like pioneers, forging westward. And we use some basic concepts such as doubling moves, which is where we get our halfway back from, and also the 80 handle rule by coming up through 3,700 to 3,750, 60, 80, and then 3,800. Okay, hope that all makes sense. Have a great rest of your long weekend. Hope this video helped you out. Good luck and good trading.